Good day, ladies and gents. How are we all doing? I hope we are all good. So we came back with another book, which we are going to go through, another Forex book, which we are going to go through. This is a request from one of the guys who went through the candlestick trading Bible. So they requested that if we get time, we should maybe take a look at this book. So this is Market Structure and Powerful Setups, Forex Market Price Action. This is a book by Mr. WadeFX Setups. So for those who want to get in touch with the author of the book, or for those who want to follow the author, these are his socials. So WadeFX, special shout out to WadeFX for giving us this opportunity to actually go through his material. I actually went through this book, and it's also a very good book for someone who just wants to understand simple price action, nothing too complicated. Anybody can go through this book. Anybody can find these setups on their charts. So special shout out to WadeFX. If you want to follow him on Twitter, this is his Twitter handle, or on X as it is called these days. So you just have to search for WadeFX Setups. Then for those who want to follow him on IG, you can just put in his handle as well, Wade_FX_setups. Then for those who want to follow him on Telegram, he also has an active Telegram channel. So you can just hit him up on Telegram. You can just follow this channel here. Then you can get in touch with him. So shout out to WadeFX for giving us this good material. Very good trading book. Lots of visuals. So as you see, as we are going through this book, you see there's a lot of visuals, a lot of clean examples. So yeah, without wasting much of your time, guys, let's get into this book. So yeah, again, Market Structure and Powerful Setups, a book by WadeFX. So the contents of this book, it's got 8 chapters. So what we're going to do is I'm going to just do one recording, or one video per chapter. And after we go through each chapter, as usual, just like we did with the Candlestick Trading Bible, we go into the actual charts to see if we can implement all these things which we are learning throughout this book. So pretty much simple. We're going to start with the basics. So for anyone who doesn't know, just know that we start from the basics. Then we'll get into the deeper market structure, liquidity, order blocks, the daily range price action. Then we're going to jump into the powerful setups on chapter 6. Then putting everything together, just a combination of everything which we would have learned into one chapter, then a few marked up charts at the end here. So yeah, so after every chapter, we will dive into the charts, look at a few examples, apply what we've learned, and see how we can improve ourselves as traders using this book, Market Structure and Powerful Setups by WadeFX. So without wasting much of your time, guys, if you are new here, if you haven't subscribed yet, please do hit the subscribe button. Do share also with your trading friends. Don't forget to comment what you would have learned or taken from the video as well. Don't forget to comment what you'd like us to look at after we finish this book. So we're just going to quickly get started. So chapter 1, the basics, expansion and retracement. So what is expansion? Expansion occurs when there is an impulsive movement towards a direction. Retracement is the correction movement after an impulsive movement. So here you see the author gave us a nice clean definition, or an illustration rather, of an uptrend. So this is the expansion move. Each time you open your charts, the first thing you want to identify is, do you have a trend first? Do you have a trend? After you've identified whether you've got a trend, the next thing you need to identify is it an uptrend, or is it a downtrend? Those are the two things we need to identify. After you've identified a trend, after you have identified whether it's going up or down, the next thing you want to identify is the expansion and the retracement. So each time your price is pushing up, the bigger move is your expansion. That's when your price is expanding to the top side. And always remember, if price is in an uptrend, price does not shoot up in a straight line. Price will move in waves as you see here. So you will get an expansion, you get a retracement, expansion, retracement, expansion. Same applies to the downtrend. If your price is pushing down, the expansion is the bigger move to the downside, then you're going to get a retracement. You get a bigger move to the downside, that's your expansion. You get a smaller move, that's your retracement. So your retracement is also called a pullback. Let's see if the author gave us that. So your retracement, others will refer to it as a pullback. It's simply price pushing up, then pulling back a little, pushing up, then pulling back a little. All right. So if you open your charts, as we are going to do after this chapter, I'm going to show you with visuals. But I'm so happy with this book because the author here shows us nice illustrations as well. So expansion and retracement. On this chart here, you see a clean chart whereby what I like about this author also, he does not use any moving averages or any indicators. He uses clean charts. Unlike me personally, I love to have like moving averages on my charts, but you see the difference, the advantages and the disadvantages as we go through. So here we've got a clean chart. Here you can see we had a nice little downtrend happening here, whereby we are having your expansion, the retracement, expansion, retracement, then the price sort of reversed. So what is a reversal? So if your price is in a downtrend, like pushing up as you see here, a retracement is just a pullback, which is part of the true expansion move. You get a retracement. But now if this retracement breaks a level to your left, like you see the price doing here, these are signs of price now doing what is called a reversal, right? A reversal. So you've got expansion, retracement, or a reversal. So here price does that reversal and the trend changes into an uptrend. So we start getting the impulsive or the expansion moves to the top side and the retracement to the downside, expansion, retracement, expansion, retracement, expansion, just like that. Right. So I hope everything is clear there. And these are trending markets, right? We're mainly looking at trending markets. So Fibonacci retracement. A Fibonacci is used to determine the end of the retraction movement. Usually the price retracts to 50% or until OTE 0.62, 0.705, 0.79 before another impulsive move occurs. So what is OTE? OTE is optimum trade entry. It's basically like a high probability area where you look for entries. So OTE stands for optimum trade entry. All right. So Fibonacci retracement. So what is a fib? A fib is basically a tool which is used to measure retracement. A fib, like how we call it, it's just a shortcut of saying Fibonacci. So a fib, what it does is it only works when your market is trending. That's the first thing you need to understand. If your market is trending, then you can use a Fibonacci retracement tool. When we get to our platform, I'm going to show you how you locate the tool and how you can just change the parameters which you see here, which are the 70.5, 0.705, 0.62, 0.5, which is usually the halfway, 0.23 and 0. So again, how you put your fib on your tool, you line it up from where that expansion is starting, which means you drag your tool from point A to where that expansion is ending, which is point B. And what we're using the fib to do is to measure the retracement. So we know after an expansion move like this, we are going to get a potential retracement. After another expansion move like this, we're going to get a potential retracement. So with that in mind, soon as you get your expansion starting from point A to point B, you map out your fib Then what you're doing now is to watch price as it is retracing like this. So soon as it retraces into the halfway mark of your actual expansion, that's where we start actively looking for setups. So what usually happens is the best setups will form between the halfway mark and the 0.705% retracement areas. This is the main point of interest, or the main OTE, as the author explains it. So this is usually where the best setups forms. But before we go further, I want you to know that some of the setups are going to, or rather some of the retracements are going to be shorter in such a way that they will only reach this area here without tapping into your actual OTE. And some of these retracements will be a little bit deeper, almost coming back to your equal highs here before they actually drop. So remember, in the markets, these variations, price won't always respect the 0.5 to 0.705 areas. Sometimes it will go beyond that area before the actual setup actually forms. So this is just a quick example whereby the author shows you the fib and price retracing into the OT area for a nice sell. The trend continues, another retracement happens, price reacts again in the OT area, and the trend continues just like that. All right, then we go into the break of market structure. BMS, that's the abbreviation, break of market structure. So BMS occurs when the price closes above or below a swing high low. Generally, every trader should trade in the direction of the higher time frame break of market structure. So what the author is simply saying, okay, I believe there's an illustration, so let me not get you guys confused. Let me just go into the notes. Notes: after the break in market structure, always wait for a retracement. Okay, so sometimes you might see other traders use this BMS as a B or S, which is a break of market structure. So this author just refers to it as a break in market structure. So please do not get these terms confused. So remember, each trader, depending with how we learned in the books we read, some books come with different terminologies, but these terms, they refer to the same thing. So you might hear me like call this break of market structure or break of structure. Just know that it's just one and the same thing. So just to repeat, because this is a very, very valuable point, your break or your BMS occurs when price closes above or below a swing high low. Generally, every trader should trade in the direction of the higher time frame BMS. So what I want to do is, let me see if I can highlight some of these things. All right, there we go. So always take note, after a break in market structure, always wait for a retracement. That's something you should actually take note of as well. After a break of market structure, always wait for a retracement. So what does it look like? Nice illustration here. What it simply means is, if you are in a downtrend, as you see here, we have an expansion move, price pushes up, then we break this last area here. So as a trader, when you identify a trend, or when you're looking at your charts in general, what you want to do is you want to pay attention to these areas where your price turns. Wherever your price is turning, you just want to pay attention of those areas. You just want to actually mark them. If you can mark them on your charts physically, put a line or mark them as a zone. That helps you to have a visual ID when price actually breaks that actual level. So let's say you had drawn a zone here, physically drawn a zone. So when price now breaks that area, you can see clearly that, okay, price is broken this area. What am I now anticipating, and so on and so on. So here, clean example of the break in market structure. Price dropping, retraces, another expansion move, breaks the market structure. What does the book say? After every BMS, always wait for a retracement. Okay, so after a break of structure, you're waiting for that retracement for your entry, right? You're not just jumping into the trade because price is broken in structure. You are waiting for a retracement. So price retraces, comes, breaks its structure again, retraces, breaks its structure again, etc, etc. That was a downtrend. Then now price breaks a structure going back up to the top side, gives a retracement. So this is a sign that your trend is actually changing, just like we explained above. So soon as you get a breaking structure, you are waiting for your price to what? To retrace so that you can get an entry. Price moves, breaks another structure, retraces. So again, each time you're getting these expansions, that's where you can line up your fib. So once you figure out that, okay, I've broken a structure, my price is now in an uptrend, that's where you can now run your fib from where your expansion move started to where it ended and price started to retrace. You run your fib, then you get your points of interest in here to actually get a trade. Same applies with this huge expansion. You want to run your fib from point A to point B. Then you want to see if price is going to retrace into your OTE areas. So here's a quick, again, illustration just here without the candles so that you understand what you're looking for. So if these areas are also hard to see, you can switch your line from candle, your chart from candles to a line chart so that you can visibly identify these tens or these breakout structures, mark the zones, then jump back to a candlestick chart and then look for your entries. So this is a clean example of a downtrend and an uptrend. All right, so guys, if I'm going a bit fast through these videos, please do let me know so that when we get into the other books or into the other videos, I can slow it down a bit. All right, so next is the range high and the range low. After the BMS, there will always be formation of a new consolidation that is called the range high and range low. All right. Always, these are the notes, always trade in the direction of the break of market structure. After a break of market structure, wait for the retracement to 50% or OTE of the Fibonacci levels, right? These are just points which you actually need to take note of. So the main important notes, I'll always try to just give the highlights. Okay, so what the author is simply trying to say is, okay, so after break of or after break in market structure, there will always be a formation of a new consolidation that is called range high and range low. So going into the illustration, what the author is saying is after a break of structure like the one you see here, maybe let me use a different color, like the one you see here, after that retracement, the price is going to set a new range, basically. So what a range, for you to have a range, you need to have a high point right here. You need to have a high point and you need to have a low point. Then whatever is in between, that is your trading range. So for example, if you see in this uptrend, which we have right here, this high right here is our range high. That's the highest point of that move. And this low here where that push actually started from, that's our range low. So this gives us a dealing range. And after price is broken, a structure, the author said, we are now looking for trades in the direction of the break of that structure. So we've got a bullish direction. That's number one. So just to summarize it, the first thing you want to identify is a trend. So if it's an uptrend, it means you are bullish. If you are bullish, once you identify a break of structure, you want to run your fib from the range low to the range high. Once you run your fib, then you're waiting for the price to slowly retrace into your OTE areas to give you a low risk buy. You don't just want to buy here because price is broken. No, no, no. You want to wait for price to set a range high first or a swing high first, then wait for a retracement, then get an entry, then ride the next expansion move going up. So the truth can be said for a bearish move. If you are in a downtrend, Same thing, you're waiting to identify price breaking a structure. Then after they retrace, you want to trade in the direction of the break of this structure here. So soon as the structure is broken, you are now waiting for a retracement. Once you get a retracement, of course, you want to line up your fib from point A to point B. Then once price retraces back into your optimum trade entry area, which is anywhere from the 50% fib retracement to the 62%, you can execute your sell. Then you can just aim for this area as a TP, and depending with your risk to reward as well, which is something you also just have to learn. So going deeper into the range high, range low, this is a nice illustration. So now you can see from this top here, we had a nice push down. So from here, it's not yet a downtrend until price breaks a structure. It's not yet a downtrend until price fails to break this high. That's also one thing you need to know. For you to have a confirmed trend, you should see price visibly breaking a certain structure in a certain direction, then line up your confluences. Then once you conclude that you're in a downtrend, then you actively start to look for your trades or for your entries. So here we have this low here and this high. Price retraces, then they come and break a structure right here. So as soon as a break of structure happens, we know we are going to be looking for what? For sells. Soon as we know that we are looking for sells, it now becomes a waiting game. So I'm sure you've heard people say the money is made in the waiting. When you're trading, the money is made in the waiting. So that waiting for your price to retrace into the optimum entry areas where you can take your best trades, that's the hardest part for all traders. Most traders want to jump into sales here. They want to jump into sales here before price actually gives the full retracement. So what I would advise you to do is, as soon as you get your break of market structure, you want to patiently wait for a retracement. Then once the price retraces, you get your entry. So here you can see the range high and the range low. Break of structure, price retraces. Once they retrace, they are setting a new range high and a new range low within that trade which you're taking. So as soon as you get another impulsive move, again, you want to run your fib from the range high to the range low, point A to point B. Once you run your fib, you're waiting for price to retrace into your point of interest. Then once price retraces, you can be able to now look for your entry and execute your trade. So again, please don't get confused. This range high and range low can also work as, like, if you're in a downtrend, that's your lower high. This is your low. This is your lower low. This is again a lower high, lower low, lower high. This also helps you if you're trying to figure out the trend, that it's a downtrend. You should be able to see price visibly showing you lower highs and lower lows, lower highs and lower lows as well. All right. So into the next, we're going to look at the failure swing, or SMS. So personally, this is the first time of me getting this term, but once you get into the charts, everything becomes a bit more clearer. So a failure swing or an SMS, this is when there is an uptrend market and the price fails to break the last top or the last swing high and breaks the previous bottom, which is a swing low. An SMS is considered to have occurred, and it's vice versa for a bearish move. So before we go into the illustration, what the author is simply trying to say is, when there is an uptrend, right? So you have identified that your price is pushing up, you are in an uptrend, then the price fails to break this last high here, which means price fails to break this high right here. And what they do now is fails to break the last top, which is the swing high, but it breaks the last bottom, which is now this one. So they will come break this level here. So that's a failed swing or an SMS from my understanding. So I think we'll go into the charts just to get a better illustration of this. And usually I think this signifies a reversal or a change of the trend, right? So let's get into the illustration. All right, so there we go. Failure, swing, or an SMS. You can see the first thing you want to identify is the trend currently happening. So we had a bullish trend. You can see structures being broken, running your fib point A to point B, getting your entries. Again, a structure being broken here. Run your fib. Okay, so let's say you were looking for an entry here. So I think as traders also sometimes we get caught up in thinking that this trend might continue pushing up. I think this is where some of the losses come from. So remember, we've got a broken structure here and our price is pushing up. So we are bullish until this zone is not broken. That's one thing you should understand. We are bullish until that zone uh doesn't get broken or until we get a failure swing. That's what you should understand. So if you've taken an entry here, if you had ran your fib A to B and you're trading in the direction of the break, once you see price failing to break here, these are the trades where you will walk away either with a small win, either you walk away with a small win or you walk away with a break-even trade, a trade which takes you out at your entry, or you actually walk away with a small loss, right? Small loss or a calculated loss. Your loss should never ever be big, right? So now if you are holding, if you were buying your trade here, and you see that this price is now retracing. So there's something called trade management. Every time you enter your trade, you're entering it with a calculated risk initially. So if your entry was here in this area, it means your stop loss is most likely here. But if your trade is going to move towards your target, depending with your target, of course, what you always want to do is you always want to move your stop loss from where it is to just above your entry if you are buying, so that if you get a failure swing like this or an SMS, price does not really give you a loss, rather go out and break even. But let's say you're swinging and you're not on the charts to trail and you're not trailing your loss has to be calculated so that your account is protected. Because now you see, if you're buying here and you don't have a stop loss, now you're holding this huge loss. You get it. So always try to make sure that your trades have got a calculated stop loss. Always make sure that your trades have got a calculated stop loss or a calculated risk, rather. That just keeps you in the game for a little longer. Because remember, again, if you're trading, there is no guarantee that this price will continue pushing up. At any point, for some reason, price can fail to continue and another trend can form in another direction. So if you protect your capital here, now you are able to identify that, okay, there has been a break of structure to the downside. So maybe now my trend is bearish and I should look for sells. Remember, the author said, always trade or look for trades in the direction of the break of market structure. So soon as we get a break here, so we can see we now have a new expansion, and this is the retracement. So point A to point B is where you run your fib. Then here is where you get your OTE or optimal trade entry area for you to actually take a sell. All right, so nice illustration here. Failure swing SMS. You can see here the price was bullish, break of market structure until we failed to break a zone. So one thing I also want you guys to note is the author is not looking for these things on the 1 minute time frame or on the 5 minute time frame. He's looking at these moves on a higher time frame, 240 minutes. That's your 4 hour time frame, or H4 or 4H, right? Depending with the broker you're using, these time frames can be denoted in minutes. They can be denoted like H4 or 4H. This is the 4 hour time frame. This actually means that the author is using a higher time frame to figure out what the market is doing, then patiently waiting. So you can just imagine that after this break of structure here, and while we wait for the retracement, the author is now waiting for how many hours? This is 4, 8, 12, 16, 24. This is a full day of waiting for a setup which is actually going to pay you, or for a setup which is going to give you low risk and a high reward. Same applies to here. Break of market structure. We are trading in the direction of the break. Our trend is bearish, meaning we're looking for sales. Our trend is a downtrend. So author from this low, our author is waiting for about 8 hours on this one, 24 hours on this one. So it's this waiting here which bugs most traders. Most traders are not patient. They just want to make money always, but they don't know that the money is made in the waiting. So this, excuse me, this is a clean or clear view of the failure swing. So what it simply means is if your price was coming up, it fails to break the last high. Then instead of breaking this high, they break this structure instead. So as soon as we get that break, that BOS or BMS, what now happens is you need to wait for a pullback or for a retracement in order to get a high probability entry. Then once you get your entry, then you can take your trade. If you fail to get an entry here, or if you wait for this swing here, it's the same thing. You're waiting for price to break this structure. Once this structure is broken, point A, point B. So now we are running a fib from here to here, and we are waiting for this retracement to form so that we can get a sell entry. So the first thing is always this. You need to identify that failure first. So once you identify it by a break of structure, then you can be able to trade this actual trade. So that's a nice illustration there. So chapter 2. So before we get into chapter 2, we're going to get into the charts. So a quick recap of what we went through. What did we go through? We went through the basics, the expansion, the retracement, identifying our trend, uptrend, downtrend, and then actually applying our fib to get entries. So we're not going to get any deeper than that. We're just going to show what the book showed us on chapter 1, so that in case you are a learner or you are someone new to trading, you don't get too confused by other terms which are a bit ahead in the book. So we're going to jump to our trading platform. So for trading, I use deriv.com for my trading, both for forex indices, stocks, synthetic indices, everything. I'm going to leave the link in the description. You can literally trade anything and everything on this particular broker. And for our examples, I think I'll try to use GBP USD so that we can start looking for our setups. So what we're going to do is we're just going to back test, because on our immediate price action right now, we don't have anything which I can use to illustrate this example. So because of that reason, I'm going to scroll a bit back so that we can look maybe for a high probability setup or explanation. So we want to look at this price action which you see right here. Right. Why are we looking at this price action in particular? Because here you can see we've identified that price is actually sort of like pushing up until we get to this high. Once we get to this high, price goes sideways, fails to break this high, but then we end up taking out these minor lows here, and we also end up taking out this low here. Right, so you can understand the level of patience which you actually need for these setups. But after that, just know that you are going to make money, because money is made in the waiting. All right, so first things first, after we've identified a high, which we are going to call point A. So I'm just summarizing everything in the first chapter so that you guys don't get too confused. Like I said, sometimes you can turn your chart to a line chart like this so that you can see the levels where your price is actually turning, as you can see here. So here you see this was the last high, and that high gets broken here. Here we get our first BMS. Once we get a BMS, we want to trade in the direction of the BMS. So what do we wait for? We wait for a retracement Before we wait for the retracement, we want to run a fib. So this is where you run, or you change your chart from your candles to your line chart just to see. That's if you're struggling with candlesticks. But otherwise, if it's clean on your candles, you can still use your candles. So we've got our point A right there. And our point B is when our price actually, okay, sorry. So our point A is actually here, the move which actually breaks our market structure. So let me mark these lows here. So soon as we get that BMS, right? So we've got a BMS right here, right there. What are we now waiting for? We wait for price to start retracing first so that we can identify point B. Once we've identified point B, what are we doing now? We now want to run our fib. So if you are new to MT5 and you don't know where to get your fib, this is your Fibonacci tool right here. This tool right here. So if you look at your MT5, you see there's the crosshair, there's the vertical line tool, there's the horizontal line tool, there's the trend line tool, there's the equidistance tool, which I don't really use. Then there's the Fibonacci tool next to this T, which we use for writing these. So right here. You can also move your cursor. I believe if you move your cursor there, it will show you that that's the fib. If I'm not mistaken, maybe I stand to be corrected. There we go. Draw Fibonacci retracement. I'm not sure if it's visible on your side, guys, but yeah, that's the tool. So once you tap it, you want to draw it from point A to point B, always in the direction of the break of market structure. You don't want to draw it like this. You don't want to say point A, point B, then drag it from the bottom coming up. Otherwise, you get different values in the wrong entry points. You always want to start from the top coming to the bottom like this. Then you just like drag it into the future, right? So if you're on the 4 hour, you can just drag it into the next week. Once you drag it into the next week, then you are now waiting for your price to slowly retrace into your point of interest or into your OTE area. So what is our OTE area? So on my fib, so personally, again, you see I use 38.2. The reason I've got the 38.2 active here is because I mentioned sometimes the price will not get into halfway of the retracement, which is the 50% fib retracement level. Sometimes price will not get there. It will retrace only into the 38.2 and the downtrend will continue. So you always just want to have these levels on your chart. Also on my fib retracement tool, you will see I do not have the 70.05 level here. It's a level which you can add. So as a trader, you can just put what you feel like works for you. So how do you put these levels? So if you want to put these fib levels, I'm not sure if on my channel I've got a video which explains this, but let me just try to like summarize this whole thing. So what you're going to do is on your fib tool, you're going to hit your tool like this, just put it on your chart like this. Then soon as, or as long as these dots appear, you want to right click, then you want to come to properties. Once you come to properties, you can change the color of your fib. You see mine has got that red line from point A to point B. You can change it under style here. That's where you can change that color. Then on levels now, this is where you can add any level you need or adjust. So on the default MT5, I've forgotten what levels are there, but you can tap a level and delete if you don't need it. You can tap a level and add it if you want to change the parameters, or you can add a certain level which won't be there. That's how best I can describe how to adjust these values. So maybe in terms of adding, let me add a level for you so that you guys can see. So I'm going to click add. Then here you see it says 0.00. I'm going to put 0.705. 70.5, which is one of those levels being used by the author. Then here I'm going to identify it as a 70.5% fib retracement point under the description. Then I'm going to click OK. Let's see if it shows. So now you see my fib has got a 30, excuse me, has got a 38.2, a 50, a 61, and a 70. These numbers are just a reference percentage view of the actual retracements, sorry, of the actual impulsive move or of the actual expansion move. So if your move has moved from point A, okay, so let me do this. If your move has moved from point A to point B, it simply means they are measuring this as 100%, right? So if price retraces to this area, if we move back to this area, it means we have retraced 38.2%. If we retrace to this area, which is halfway through the first expansion, it means we've retraced 50%, which is halfway. If we retrace into this area, it means we've retraced 61.8%. And if we retrace up until here, you notice we've retraced until 70.5%. So other traders will have a 79% here. Other traders don't use a 38.2. Other traders will have a 23.5. The reasons you see traders have all those price points is just a point of reference because they know that chances are, the markets are liquid. Price is liquid. It means as much as you are expecting a high probability trade to form within this price points, price might just tap 38.2 and continue dropping, or they might pass those levels and maybe get to the 79% level, then drop. So you shouldn't beat yourself up too much to look for a holy grail Fibonacci. There's nothing called a holy grail Fibonacci. The thing is, you just have to have these parameters. They are just there to guide you in terms of places to look for high probability setups. So coming back to our charts, point A to point B, we run our fib. Once we run our fib, so remember, like I said, also you want to mark the lowest area for future reference. You always want to mark that lowest area for future reference. So here we would have got a sell anyway in this area. Now, if you want to refine your entries now, I think as the book progresses, you will see the author. I think he will do that. Let me not jump the gun here because there is ways for you now to refine your entries to know exactly when to enter. But this is just to give you an overview of the area where you're supposed to look for your trade. So after we got price retracing into our OTE area right here, we got a nice expansion to the downside. And what did we get here? We got another BMS. So as soon as you get your BMS, what do you want to do? So after you use this fib, you can remove it from your charts, wait for the next. So now you've got a fresh point A and let me remove it, and a fresh point B. So usually you want to pin the highest high of that move and the lowest low. That's your point A and point B, and you just want to drag it into the future. As soon as you identify your point A and point B, you run your fib. So here I just wanted to write BMS. All right, so we've got our BMS right here. Soon as we get our break, we're now waiting for a retracement into our OTE zone. Price reacts into the OTE zone, it drops. And when it drops, what do we get again? We get another BMS here. That means we now have a new high here and a new low here. This is also your range high, range low, range high, range low. Don't forget about that, right? So we want to mark again our fib, just like this. Then price retraces into our fib OTE area and we take a sell. So at what point does the downtrend become a failed swing? When price fails to take out this low, but rather comes back and takes out this high, that right there is an example of a failed swing with a BMS here, whereby we start now looking for buys. So what I want you to notice here, price almost gave us a failed swing here because we failed to take out this low. But again, this was an invalid failed swing. Why was it invalid? Because price failed to take out this high. So if this price had done this, so we're coming down, we failed to take out this. But if we had taken out this, then we could have got a BMS here. Start looking for trades in the direction of the BMS, run our fib, and now wait for the retracement and look for a buy. Those are the things you just need to have in your mind on hindsight as you are marking out your charts. So that one fails and price continues in the downtrend, right? We continue pushing down basically. So we break structures to our left. So we had this level here, this level here, and this level here. So here we get another BMS. So once you get another BMS, this is where now you see the reality of Forex or how these markets move. So if we run a fib here, I want you to notice that there is no sell setup forming in our retracement area. So do not force a trade. That's one thing I'm going to tell you. Do not force a trade. If you see nothing forming here, do not force a trade. It simply means that the trend which you were seeing forming from the time we started looking for this setup, at this point, that trend rather is finished. There's nothing we can use. Then we want to look at the last range high. So remember, as price is moving, you got your range high, range low. If price breaks to the top side, right, and does something like this, then we'll be looking for buys. But this now is an example of what's called a liquidity sweep, which is most likely going to take us into the next chapter. So this book, what I like about this book is it's got everything which you need to use as a trader. So remember, as a trader, you're not looking only for the fib to make your entries. You've got an array of tools which you have in your kit, which you can use depending with what the market structure is showing you or depending with what the price is showing you. Then the price actually continues to sell. I don't know if I can continue showing here. Maybe we are now in an uptrend, but anyways, let's move with this. So from this high now, this price now does what is called an accelerated move. So from point A to point B, we broke a structure here. We're looking for sells. But if you were to run a fib after seeing this little sideways move, you see there's no deeper retracement, which shows there's an acceleration of price to the downside. Even if you run your fib from here to here, you cannot really use it. So when price is accelerating like this, there's other tools which you can actually use, which we are going to go through. Everything is in this book, so do not stress. The only thing you have to do is just keep moving with us as we go through this book. So here now is an example of what I'm viewing as an SMS or a failed swing. So our price is coming down, coming down, coming down. Then we come down once we fail to take this high. We push up, we break this level here. So for me, I think this qualifies as a BMS, So what you simply need to do is you are trying to identify something which speaks to you as a trader. If you feel like this is not visible enough to be a BMS, there's nothing wrong with just waiting for price to present with you with the next clearer BMS, which then happened here with this clean break right here. So for me, it starts right here. So price pushes up but fails, comes down but fails to take out this low you see here. So this is what I'm talking about. We come down, we fail to take out that low, then we push up, breaking this level here. So we've got a break of structure. Once we get a break of structure, what are we doing now as traders? We are now looking for price to retrace so that we get an entry and buy. So if this price action is unclear, like I said, you simply have to wait for the next BMS, which is visible to your eyes, then look for the next setup. The reason I'm saying you should wait is because if price is in a trending market, it's going to give you multiple entry points. So don't worry about missing the first move, because usually these first moves sometimes might be traps and price can just continue pushing down like we saw earlier to the left here. So you are always trying to wait for something which is a little bit more familiar. So break of structure here, price pushes up. Again, if it's unclear, just switch to your market, to your line chart. And if the line chart is showing you that it's unclear, you simply wait, like I said, and you wait for this next cleaner BMS. So once you get the cleaner BMS right here, what are you now doing? You want to now trade in the direction of the break. So this was our structure, this was our structure, this was structure. We got a nice break. We do agree that this was ugly. It might have confused us all. Unless you're a seasoned trader, of course, you might have got something. So if it's unclear, you wait, you get a cleaner BMS. Once you get that BMS, what are you now doing as a trader? You want to see where did that trend start? What's your range low and your range high? That's what you want to identify. So you can just come on your charts. You don't really have to write all these things which I'm writing on my charts. As a trader, you just have to know them. This is just like for learning purposes. That's why sometimes I'm writing these things so that you guys can be able to see them. So we've got a range low, range high, which is also an expansion move. So I'm actually rounding up, guys. I don't want this to be too long. This is also your expansion move right here. So we get our expansion, which is this. After we get our expansion, what do? We figured out that the trend is now bullish. We've broken a structure, like I said right here, BMS. So what are we doing now? We are now going to our fib, take our fib to from point A to point B, run our fib into the future, then wait for the retracement. We are waiting for price to retrace either into the 38.2 for me personally, or as the author says, into the 50, 61, or 70.5. So anyway in here, if a setup forms, as a trader, you have one duty: execute. Either your trade will hit a stop loss or it will go in your direction and hit your profit. So this trade moved in our way, retraced a bit, continued moving for the rest of the week. So if you also identify this as a BMS, that's also another reason to enter that trade. So let's say our first entry was based on this. Then we get another BMS, another range high, range low. We run our fib again from this point A, range low to the range high, drag our fib into the future. You see price actually retrace back into a point of interest, then pushed up. One thing I'll just tell you guys is you can only use the fib if you have identified a clean trend. If there is no trend, such markets are hard to trade. That's also one thing you need to know. That's why you see most traders lose as well, because one, they are not patient. Two, they are chasing price. Three, they are not patient enough to identify the actual market structure. So if you are able to identify a trend, like you see, this is ugly price action. You cannot use this price action for anything. Rather wait for price to start to show a cleaner market structure. Then after price is giving you a cleaner market structure, you can look for trades. Other setups, there will be so much acceleration like you see from this week of April. From this low here, price literally gave a huge acceleration. So if you're in H4, sometimes it might be hard to use your fib here. So do not be scared to go to at least the H1. Of course, don't go lower than the H1 if you're looking for a trend. Rather go to H1 or maybe the 2-hour time frame or 3-hour time frame. Look for the same setups which I just explained. So I showed you an example of a buy. I showed you an example of a sell. Your duty now as a trader is to go to your charts, open the asset you trade, go to your 4-hour chart and try to identify first things first, keep it simple. Try to identify your trend. Do you have an uptrend? Do you have a downtrend? Where is the market expanding? Where is it retracing? Are you currently in an expansion? Are you currently in a retracement? Once you figure that out, next thing you want to run your fib. If you've got a nice clean expansion and a clean trend, then the next thing is waiting for an entry and just executing your trade. So backtest a bit. Let me know in the comment section which pair you backtested. Let me know if you're struggling to find these setups. And let's meet on the second chapter, which will be the market structure. So if you watched until the end, thank you so much for watching. Special shout out to WadeFX. Like I said, those who want to follow the actual author, he's got a Telegram, he's got Instagram, he's got Twitter. You simply need to follow through using these socials on the bottom, which are for Twitter, Instagram, and Telegram. You can get in touch with the author, and he can most likely explain this better than the way I'm explaining. I'm just explaining based on my understanding of trading as well. So if you watched until the end, thank you so much for joining. If you still haven't yet subscribed, please do hit the subscribe button. Comment what you traded, comment what you are back testing on, and also let me know where you are struggling based on the first chapter so that we can fix that problem before we resume going into the next chapter. So if you watched until the end, thank you so much for watching. Enjoy the rest of your day. Good trading.